Okay, time for Q&A from last week's market outlook. We'll start on Discord first. Excellent. The prompts for sector, industry, and company are exactly what I was looking for. Oh, okay. For the AI segment that I'm going to be working on. So just to reiterate, because I've had some people say, I can't find it. Where is it? I was going to do a video on understanding coal mining, being that the president of the U.S. has green-lighted beautiful, clean coal. So maybe it's going to become a more important mining segment in the U.S. But there are a lot of sub-industries. It takes me about 3 weeks to do one of these things. So I started playing around with AI, some AI tools, Gemini, ChatGPT, Claude, and just tweaking the prompt to see what I get. And I'd say it was able, during the course of a day, I was able to save, my estimates, about 5-6 hours using this, because it gets you a lot of the way there, but not all the way there. So I thought, well, rather than just producing these sub-videos, these sub-industry videos, why don't I do one using AI and teaching AI at the same time we generate output for understanding coal mining? That still takes me about 3 to 4 weeks of a deep dive to get done, because to assess and evaluate the use of AI, I must, of course, become sort of an expert in coal mining, so that when the AI gives me output, I can say, okay, I need to tweak my inputs a little bit more until it gives me the correct information. And then once we have our prompts, whether we're looking at context prompts, task prompts, or persona prompts, we can then reuse those prompts like Legos, like little building blocks, depending on what sub-industry we get to. But look, we're still looking at about 3 to 4 weeks away until I get that done. So please don't say, where is it? I can't find it. If you have the applied analysis module or the whole applied level, it will show up. Just have patience. Do you still believe in the event global distress actually shows up, U.S. Treasury will still be the safe haven asset? Well, if money has to flee globally, and usually this is because of some big liquidity event that affects everything, money will find its way to the largest asset possible, and that's U.S. Treasuries. It is the largest that can handle the most inflow. It will then be the safest asset. Right now, the idea of, is it a safe asset, is starting to be questioned, but if it's a global problem, it will be the safest asset, so it should perform in an event like that. I'd rather not have an event like that to find out, because everything else would go to shit. We answered this on the live on Sunday night, and I don't want to answer questions in two places, so we'll pass on this one here. 50% withholding tax, that's insane. And this is pointed to a number of times, asking, where do you get this? This is the headline from Globe and Mail. Let me just move it over. Proposed Republican tax change would lead to spiking costs for Canadians who invest in U.S. securities. You need a subscription to read this one, but it does outline what the proposal indicates, that if it does get through, the tax treaty between U.S. and Canada would effectively disappear, and you'd have withholding tax of up to 50% on income generated. Not capital gains, but income generated. There are ways around that. Instead of buying bonds that have coupons, you buy zeros. But you lose the cash flow, especially for retirees that hold U.S. assets, because they live half the time in the U.S., they live half the time in Canada. They need the cash flow off the asset. That would effectively shut down that whole industry, called the snowbird industry, where Canadians own property in Florida and they live there 6 months of the year. That would effectively shut that down. But there are ways around that. Let's put our window back. What tickers can you play for Euro bonds? Are there any derivatives like futures or options that we can play with this? Well, I don't think I said anything about Euro bonds. I think you're confusing a few things. You'll remember in level 1, I don't know why I can't grab my, you see it here? Ah, there it is, okay. In level 1, we talked about different types of bond categories where you had domestic bonds, you had foreign bonds, and you had Euro bonds. A domestic bond, and let's just say I'm in Canada, is a bond that I buy in Canadian dollars issued by the Canadian government, right? A foreign bond would be something I would buy in US dollars issued by the US government. A Euro bond is issued outside of any jurisdiction. So it might be a Japanese bond I buy denominated in euros. And it's not issued in Japan and it's not issued in the Eurozone. That's a Euro bond. What I was talking about was ESBs, which are Eurozone sovereign bonds. Not Euro bonds, but European sovereign bonds, which would be, from the perspective of the sovereign bond itself, domestic. Domestic, if we think of the Eurozone as one domestic area, whether it was Germany, whether it was France, whether it was Spain, whoever was issuing the bond, it would be denominated in euros. It would be a European sovereign bond, not called a Euro bond. I feel the knowledge without intelligence part. How do you improve that on a personal level? For example, there are so many videos, so we raise our knowledge, but application intelligence. There's a lot of debate on whether or not you can actually increase your intelligence. The belief is that that is a trait that you're born with. It is a limitation of the wiring of your brain. That while you can increase your knowledge, it is much more difficult to increase your intelligence. There are some who think, well, yes, you can increase your intelligence, and humans have increased both their knowledge and intelligence over time. Just to put this in a way that we can think about, 100 years ago, the average IQ in a population, let's just take North America, was 100. Today, the average IQ in the population is 100. You would say, well, how can you say that intelligence has increased at that level when the measure is exactly the same? This is how this is done. You have in this year, let's say that this was 1925, and you issue an intelligence test, and you take the average score, let's say it was 57, and you look at the distribution of the grades. 57 becomes 100. The average becomes the average intelligence, becomes 100. Let's say you get to 1950 and this same test is given to a group and the average is now 66. That is 100. And then of course you have your standard deviation that's in the data set from the average score. Well, it's now 100, so you would say, well, it was 100 here, it was 100 here, intelligence hasn't increased. But the average was 57 here, the average is 66 here. So it's not the standardized output that you're looking at being the average IQ is 100. 100 means that that on that test, for everyone that took that test, you scored average. What is fairly constant is the standard deviation being 15 points. So that between 85 and 115, you cover about 68% of the population. And you have 16% of the population that are above 115 and about 16% of the population that are below 85. An interesting thing about IQ tests, a very interesting thing, is if you look at females and you look at males, the average is the same. Across almost all populations that you look at, the average is the same. However, for females, it's a much tighter distribution than with males. So for females, you don't get the really cognitively impaired individuals. They tend primarily to be men. The severely, and I'm going to use the word you don't like, retarded, the severely retarded tend to be primarily men. But at the same time, on the other end of the spectrum, you don't get this. The distribution for men is believed to be wider on both sides, which means if you look at the greatest mathematicians out there, they tend to be men. The greatest physicists out there tend to be men. Not that there wouldn't be any women. There would, because the tails do extend outwards. It's just if you told me we have somebody who is severely mentally retarded, name the gender, I would win more often than not if I said male. And if you said we have someone with an IQ of 220 who's a mathematical prodigy, name the gender, I would win more often if I said male. Probably more information than you want right now. Just to get to your question about intelligence, because it is an important question. How do I increase my intelligence? Human intelligence has been increasing over time. Even in my lifetime, I was able to increase my intelligence. I believe way back when I did IQ tests, high school, university, early university, I would score low 130s. By the time I was in my PhD program, I was scoring 140 to 145. So it does increase over time. Now, the test does change over time, so then you have that problem of, well, is it really? So that there's the controversy, is that when you have a couple of variables changing, you can't really tell. For changing your intelligence, I would say the key things are open yourself up to the opportunities and possibilities of existence. So that if you believe a certain theory, if you say, this is what I believe, explore the other ones. Just so that you can see how they see the world. That true intelligence is being able to have two competing arguments in your head at the same time, as opposed to just marrying one train of thought and saying, this is it, this is all there is being able to see the world through multiple lenses and through, seeing viewpoints. Maybe you don't agree with the viewpoints, but you can make the argument for the viewpoint. So I would say that, read, explore, learn, listen, discuss, all of those things. That's way more information than you wanted, I'm sure. Oh my God, Powell was right. National health expenditures grew 7.5% to 4.9 trillion. Obamacare tweaks are slowly, not so slowly actually, killing government budgets. Well, I don't know enough about the U.S. healthcare system to bring it down to any one issue. So I can't really comment on this other than you've got a national the NHE fact sheets. You've got a reference for it, so that's the important thing. Here's an answer to the intelligence part. You have to keep exposing yourself to diverse opinions that genuinely challenge your own. True. I'll give you an example. Knowledge is knowing that there are infinite amount of prime numbers. One of my math professors judged intelligence based on how many ways you could mathematically prove that being true. That's a good one. One problem with the Trump people is that they are diehard in the things they believe. It stunts their intellectual growth. This is what happens when one lacks humility. Okay. Oh, this is another another question from Sunday night. We want to try to keep those, when I do a live event, we want to try to keep those to those sections. That's one of the benefits of being on Discord, by the way, is that you do have access to those live events that I do. I don't think I'll do live events on YouTube anymore. So if you are listening on YouTube, if you're not in the Discord, in a couple of weeks, I'm just waiting to about mid-May. In a couple of weeks, you will have an invite code to be able to get into Discord so that you can see the market outlook. And that's all you really need to see. You'll be able to see the market outlook and participate in that on Discord. Any thoughts on making CFA Level 2 and 3, 2018 or 19, all modules for free? Well, it's not my business anymore, right? I sold the CFA business, the CFA side, to Serify 3 years ago, a little over 3 years ago. That would be their choice. I'm going to side with no because I probably wouldn't do it either. The level 1 for free is meant to get you addicted to it, is meant to get you into the system, right? If you have access to level 1 for free and you say, not really interested, well then 2 and 3 is not going to do anything for you. If you have access to level 1 and you say, this is really good, well, you can pursue self-study on your own. There's no shortage of that on YouTube, but if you're going to go through the exams, well, you can't write level 2 till you write level 1 and pass it. So there's no point in giving you level 2 and level 3 for free until you pass level 1. So no matter which way we look at it, level 2 and level 3 are not needed, right? If I still owned the business, just from a business perspective, I would say, well, I wouldn't do it. Level 1 is the hook. If you're hooked at level 1, then you're in the ecosystem. And in the end, this is not free to do. Knowledge is widely available and free out there. The delivery of knowledge is what has a cost. It's not free to deliver it. So having it for free, even though it would be dated, would still be cannibalizing sales, which then makes it difficult to cover the costs so that those who do pay would then have to pay more. I've always believed that you can get to where you need to go with volume. Make the price low for everybody, do it with volume. You'll do just as well as those who want to charge you $2,000, $3,000, $4,000, right? How much money should I have minimum to trade and apply whatever I've learned in the applied level? It seems from chats, most of applied level are millionaires. I can recall seeing this question before. As far as question number 2, when you start asking questions like this, should I buy this? How much money do I need? I cannot answer that because it relies on me knowing a hell of a lot more about you, right? There is all advisors, and I'm not an advisor, I'm an educator, but all advisors have a fiduciary duty to know their client. What are your goals? How old are you? How much of your wealth does this represent? What is your contribution plan? What is your annual income? What are your future expenses? What's the liquidity need of this money that you have? What is your risk aversion profile? So many things that I would need to know to understand what's appropriate and what's not for you. But on a general level, if you say, I want to apply some of the techniques and you want to move outside of ETFs and get down to the individual stock level, you don't want any one stock, even with a small account. If you have a $5,000 account, you really can only hold 1 or 2 stocks. That's kind of a dangerous place to be. I think if you have that little money, you really can't afford to lose that money on one bet. I wouldn't even use margin. I'd just be buying the index. And your big thing is your plan for education and your plan for contribution. Once you get to about 25,000, you can start experimenting a little bit here and there. And then as you build your portfolio, you build your knowledge, you build your risk tolerance levels, then you start branching out. Too many people open up an account with $5,000 and they go crazy on the options and they lose it all. I can't even tell you how many people blow up in their accounts. If you think about how many people turn a $5,000 account into a $100,000 account in 6 months, and you read about them on Instagram, I'd say 80% of the ones you read about, well, no, you wouldn't read about it on Instagram, well, they're on TikTok or whatever social media they use. I'd say 80% of that they're lying to you is bullshit. For every one that can do it, there's probably hundreds of thousands who blow up. You don't hear about the ones that blow up. They don't have TikTok accounts, right? Who wants to follow someone? Hey, I blew up today. This will be my last video. I mean, that would be a short story, right? Anyone have a reputable source on this? I haven't seen it anywhere. I don't believe it's real. It is. Well, I mean, if you have access, I read it in the Globe and Mail, and then I read it, I believe, in Barron's, or was it on Market Watch? It was one of the two, about increasing the withholding tax from foreigners holding U.S. assets. So to the extent that you can trust Globe and Mail is Canada's version of Wall Street Journal. So you do have some journalistic integrity there. A few weeks ago, you mentioned in one of the videos, if I'm in the U.S., I can keep investing in U.S. companies. Do you still think the same? I don't think I said it that way. I think if as far as currency exposure, if your domestic currency or your account currency is the U.S. dollar, you don't have to worry about U.S. dollar risk. So you can keep investing in U.S. assets. As somebody whose base currency is not the U.S. dollar, investing in U.S. companies, you have no choice but to invest in it in U.S. dollars. So you have the company that you're long, but you have currency risk because now you have the U.S. dollar. What if the U.S. dollar drops in value? Even if the asset doesn't drop in value and the currency drops in value, you still lose. So think about it this way. You have euros, and let's say the euro is 115. This is, sorry, 1 euro is 115 US. So you take 100 euros and you buy 115 US dollars. There you go. You got 115 US dollars. Now the euro goes to 130. So on the way back, you're not going to get 100 euro. You're going to get something less than 100 euro because the euro strengthened while you were holding a foreign currency. Said another way, the US dollar depreciated against the euro. So even though you still have the same 115, when you go backwards into the euro or move back into the euro, you're not going to get the 100 euro you started with. Now imagine that this were a stock that also went down from 115 to 105. So you bought it at 115, ended at 105, but the euro went from 115 to 130 US. You're going to get far less than 100, more than what the drop in the asset is. But if your base currency is the US, it takes out one source of risk, which is the US dollar. Do you think it'll stay the same? If yes, do you think it will change in the future? Well, so the answer to that is yes. But you could ask me anything. Look around at the state of the world today. Do you think it'll change in the foreseeable future? Yes. Look at that couple's relationship. Do you think it'll change in the foreseeable future? Yes. yes. On almost anything, will it change in the foreseeable future? Yes. I tried to find it as well. Okay, there we go. For all I searched for was Republican proposal to increase withholding tax on U.S. assets held by foreigners. Google that and you'll find it. Here are your thoughts on this theory. Economic growth may slow down due to a lack of new consumer-facing technological innovation. Okay, well, I'm not with you on that. I don't agree that we would get that. I think the economy and policy are really different. That the economy and businesses operate not because of government, but in spite of government. And I've felt that way. I've been feeling that way probably for about 20 years now. That businesses can be successful in the economy despite government. In other words, we can overcome government. So government, in my mind, for the last 20 years or so, has been an impediment to economic growth. Not an aid, but an impediment. And we do, as businesses, we do what we do in spite of government. So I'm not with you on the first sentence. Many people argue that AI is the defining innovation of this decade, but I believe its impact will be more focused on improving bottom-line efficiency rather than driving top-line growth. If I had to pick where the big impact would be over the next few years, yeah, it probably would lead to greater efficiency as opposed to higher revenue. So if I used it in my own business, I could generate academic output faster, but that does not necessarily mean my sales will grow faster unless I say the level of sales is directly correlated to the quantity of content that I have. And if that's the case, the more content I have, the greater my sales would be. Another way to say it is the level of sales that I make is a function of the size of the audience I can create. So if I can give all my videos to AI and say, here's the video content and here are the new subscribers gained, give me insights into what seems to get the most subscribers. And maybe it finds some pattern and I start implementing that and my subscriber count on YouTube increases. If sales are tied to the level or to the size of the audience, I could generate more revenue. So maybe not in a direct way, but in an indirect way, sure. However, we are, I think, at the very beginning of the AI revolution. And I do think that given enough time, this will continue on. There have been some technologies that have come along where early in the process I said, this is going to be something, but it's not very useful today. This was the internet in 95, 96 when I was first introduced to it. I thought, this is really cool, but there's not a lot I can do, but this is really cool. This is going to be something. The BlackBerry, that device, when it first came out, I thought, this is really great to be able to have a push system for email notification. I knew that was going to be a big thing. Cryptocurrency, 15 years, 16 years later, I'm still struggling to see what the point is. Still struggling to see what the point is. Fake meat. It's like, yeah, okay, but this is not going to be a big thing. This is not a big thing. AI, yeah, this is going to be a big thing. Okay, maybe it's not that useful right now. It's like the internet back in 95, 96. This is kind of cool, but it's not really useful yet. I believe AI is like the internet in 95, 96. Give it 20 years. Give it 20 years. Close your eyes, go into a coma for 20 years, wake up, and I'll bet you won't recognize most of the consumer products that you have. You'll think, it can do that? We can do this? Where's my keyboard? What do you mean I don't need a keyboard? Keyboards died 12 years ago? Really? I do think it is going to be big like that. But in the near term, sure. While AI can significantly boost production efficiency, potentially making products 10 times faster, consumer demand will still be limited by natural consumption rates. Consumer demand will be limited by the level of income, right? So that if you can make, if an individual starts making more money, the level of their consumption increases. It may be 95% of their income, but if you dramatically increase their income, and they still spend 95% of what they make, they will spend more on what they make. But there is, I see where you're going with this is at some point, what the increase in productivity would lead to a surplus of goods and a surplus of services. Yeah, I think you're on my side now when I say we live in a technologically deflationary world. And what is AI going to do? If it boosts productivity, make things cheaper, make things more available, make things more abundant. Inflation is not going to be our problem. Deflation will be our problem. So I think you subtly got to, sorry about that, I'm sitting on this weird stool where they decided to put the foot part of it as close to the stool part of it as possible. So every time you put your foot on it, you bang your ankle in it. European design. Because I'm in Madrid here at an Airbnb. In the most uncomfortable chairs I've ever imagined. I don't know why this place I'm in looks really modern and cool. But the owner here decided to go with showy stuff that has a certain look and say, who cares if anyone's comfortable in this stuff? Let's buy the most uncomfortable furniture. And we'll just put it around the place. Oh, it looks good. I should take pictures and show you. It looks really good, except it's the most uncomfortable furniture you can find. Anyways, back to this. As a result, beyond a certain point, increased production may become more of a burden than a benefit. This is unlike innovations such as cell phones, smartphones, which directly engage consumers and drove substantial new demand. But you can't imagine what the future could look like. It could open up whole new industries. I want you to go back 30 years ago, 1995. Actually, let's go to 1990. You didn't have a cell phone bill. You didn't have a data plan. You didn't have an internet bill. You didn't have any of that. So you had a certain level of income and you went and spent it. And then as time went on, you felt, well, now I need an internet connection at home. Well, that's a bill that I never had when I was in my 20s. I never had the internet bill to pay. I never had a cell phone bill to pay. I didn't have to have a data plan. I didn't have to have a cloud service where I store my files. I didn't have any of those expenses because those industries didn't exist. So what industries will exist where you'll be spending money where you otherwise wouldn't? All your AI agents and your AI data plans, those won't be free because they will save you time and you'll begin to recognize the value of that time and you'll pay for it. Right now, ChatGPT is $200 a month. However, if you're hiring somebody at $80,000 a year, you're spending $40 an hour. If you can save 5 hours a month, you've just paid for that $200. And I can guarantee you this will save that person more than 5 hours a month. So you might get away with 2 analysts where you otherwise would have needed 3. However, you do have a bill, you have the AI bill, but look at the industry that is created. You got to make the GPUs. You got to make the data centers. You got to staff the data centers. You need the energy to run the data centers. You have to build the energy infrastructure for that. You need the hardware and all of the infrastructure assets that go into building that stuff. Just the industry that it creates. Well, what happens when you do have robots in the house? And I don't mean walking, talking robots. I mean very task-specific robots that go beyond what a washing machine can do. Maybe it's something much more. Well, that's a whole new industry that you're building out, perhaps, right? So you can't just project out the technology without projecting out the growth of new industries that come with that technology and the growth in the amount of services you now have to pay for because now they become part of a necessity of life. Again, in 1985, I didn't have a cell phone bill to pay. I didn't have an internet bill to pay. None of that stuff existed. And I didn't notice that I was living any kind of life that was deprived in any way. But today, those are necessities. Those are bills that exist that never existed. Well, 20 years from now, I guarantee you there'll be 3 or 4 more bills that you have that never existed before with whole new industries behind it. Long answer, right? Discord notification issue. Is there any way to get notified of only Dr. Meldrum's activities regardless of which channel he posts on? Yeah, I think there is. Although I don't know the answer to that one. I won't read the rest. I think it goes on with that. I just search using the from function and you can see all the messages by username. There you go. I try to stay out of a lot of the conversations that happen. I want them to happen organically rather than being directed by me. And I find that once I do post something, other people hold back. So I really try to stay out of the conversations. And I am aware that when I do post something or I jump into a conversation, there could be an intimidation factor, and other people, it almost shuts down the conversation at that point. I am aware of that. It shouldn't be that way. I know there are people on Discord who are experts in industries that I know nothing about, but it tends to do that. So I try to stay out of conversations as much as possible. So if you search for what I post, you'll probably say, this guy doesn't do very much, does he? All right, that's the end of this one. Let's head over to YouTube now. Okay, I haven't had a chance to look at any of these yet. Watch these on a weekly basis. Every week I am shocked, Such high quality. Oh, okay. Let's just pass that. Please don't stop this. I have no plans of stopping the market outlook at all. I do have plans. We're on YouTube right now, and I have Discord. I do have plans of moving the market outlook over to Discord. However, about 20% of it will stay on YouTube. That'll be the screen on duration, the screen on beta, which would be about 15 minutes long. The balance, the other 45 minutes to an hour, will be available on Discord. However, if you're on YouTube, I will give you a link sometime about mid-May. Mid-May, I'll give you a link. It'll just be one link. It'll be the same link for everyone because you'll have access to Discord for the market outlook. You won't have access to all the other channels because all of these are for the applied level, which is a paid subscription. But you'll have access to the full version of the applied level, and the comments section here is much better, as you've seen, because you can actually post links, you can post pictures, you can post video, you can post a whole bunch of stuff other than just text. So it'll be free to move over there. So I won't be stopping the market outlook. I'm just going to be changing where it is. Why would I do that, you say? It's because of the comment section. The amount of bots I get on YouTube, the amount of scam and spamming comments that I have to delete on a daily basis is tiring. And I don't want my comment section to look like, crypto pumping every second, third comment. So I have to delete those. It's a lot of work. Also, the ability to comment on Discord is going to be merit-based. So if you get there, you'll have A1 status, but you won't be able to comment. There'll be a bot that if you upload some evidence of your professional or academic standing, then you get the ability to comment. That's just what I'm trying to get done. So, multi-million-dollar trader, and I have my OTC desk and quants watches. Oh, well, set the bar high for me, right? Don't let me relax. Okay. Are these all? Hang on. I should have gone through these first ones. As a Kiwi, I can say personally that I used to put most of my paycheck into U.S. stocks, and now I pretty much put them into New Zealand and Australian stocks directly as a result of the instability caused by Trump. You're not the only one doing that. And I know a few friends doing the same. I still like my U.S. companies, but Trump has just created intolerable risk for my portfolio to rely on the U.S. exclusively. He's done two things. Well, I shouldn't say he's done two things. Two things have happened because of this. Number one, you have a leader in the U.S. Now that is unstable. Not mentally unstable, but policy-orientedly unstable. As of today, he's back to calling Canada the 51st state. He stopped doing that a while back. Now he's back to it. He had 10% tariffs across the board. Then he had a whole bunch of tariffs. Then he pulled that down, except for China. Now he wants to pull that down. He threatened to fire Powell. Then he said, I'm not threatening to fire Powell. Everything with Trump, every sentence he says, you have to end with a comma and say for now. The reciprocal tariffs look like they're going to be gone for now. It looks like he wants to make a deal with China for now. He stopped calling Canada the 51st state for now. He's now calling Canada the 51st state again for now. So there's the first thing that he's introduced is just this volatility in his behavior and his volatility in his policy by tweet, policy by truth, if you want to be specific. The other precedent that has been set, and this is mostly by the rest of the U.S. leadership, is that the U.S. is run by one man, that all decisions for that country are made by one man. Where has Congress and the Senate, where has anyone else been in all of this turmoil, this damaging turmoil? You've heard silence, Crickets coming from all over Washington and Capitol Hill. Nothing. So Trump has set a precedent of instability in decision making, and Congress and the Senate have set a precedent by not interfering and saying absolutely nothing. So how can you stay in a market that is so determined and dominated by the whims of one elderly man? Let's say what it is, one elderly man who seems to be making decisions unopposed. I think that's the bigger fallout from all of this, is the absence of any other branch of government. I've hedged my U.S. equities, leveraged FX position, long Aussie U.S. My U.S. are mostly in cash and almost market neutral at that. Not sure if it's a good idea, but seems to be working so far. I can't follow what you're doing, so I can't comment. I have substantial exposure to U.S. Treasuries, particularly through TLT. If a deep recession were to hit, wouldn't the resulting drop in consumer demand be strong enough to counteract the inflationary impact of tariffs on the supply side? Yeah, one central banker this morning said that. I'm doing this on a Thursday, by the way. I think it was Waller who said the tariffs, the drop in demand from the tariffs and any resulting recession would overcome any price increase in the tariff. If so, wouldn't that give the Fed enough reason to step in and decisively push rates down across the entire yield curve? No, I wouldn't say that. Usually when that happens is because there's some functioning of the financial system that has failed. But as Powell had said last Friday, markets are dropping, but they should be dropping. In other words, the market is doing what the market does. It's repricing assets in the face of new risk. So we're not here just to prop up asset prices. We're here to prop up asset prices if the asset prices are falling because liquidity has dried up and you got to generate liquidity from everywhere. In other words, there's no reason to sell these assets except to generate liquidity. Right now, the selling of the assets is about adjusting risk. So if in a recession, the Fed cuts the short rate, but the long yields don't drop because the market is pricing in a higher risk profile for treasuries, the Fed would then say, it's not a liquidity problem, it's the market doing what the market does. We're not here to intervene. We're not here to manipulate the price of what is going on. We're here in extreme situations. Now, if there was a recession, it lasted 1 quarter, 2 quarters, 3 quarters, at that point the Fed would be saying, okay, we need to do something more. Then they would step in and do that. But I think that would be, sort of a long ways off. I wouldn't look for them to do that as a first reaction. It's hard for me to believe that when push comes to shove, the Fed won't reverse course and step in strongly and fast. If there is a breakdown in the financial system, they will step in very fast. But if it's just selling because of a recession, because earnings are coming down, because risk has to be re-rated, they won't step in. They won't step in. Quoting Mark Twain, history doesn't repeat itself, it often rhymes. Could this be the beginning of consequences similar to those that followed the implementation of Smoot-Hawley Tariff Act of 1930? Well, here's the thing about about these types of tariffs that the administration is contemplating. Find me a time in history where this has worked out well, right? Without pointing to a very short-term effect here and there, but that its implementation has worked out well. Even the era that Trump points to did not work out well for the tariffs, did not work out well. So he's grossly misinformed, but a sentence or two is all he needs really to say that I'm really, really informed. So he's grossly uninformed and misinformed about economic theory. When the Democrats were in power, the common saying from Republicans is, find me a time in history where socialism ever produced a good output or a good outcome. And it's true, it never did. Well, now the left can say to the right, find me a time in history where these kind of tariffs ever produced a good outcome, and they would be just as right. They never did. Yeah, it will rhyme. Watching a market outlook tutorial, I understood everything but the concept of real rates in terms of discounting uncertain cash flows of an asset. Equities at a real rate rather than a nominal rate. Well, think about it this way. Let's say that you made 1,000 units of something, you sold them for $1, you had $1,000 in revenue. And the next year you sold 900 units of something, but you sold them at $1.20, so you made 1,080 in revenue. You would say, aha, revenues are up 8%. I don't have a problem. Well, you do. Quantities are down 10%. Price is up 20%. Well, you can't keep raising your price at that level. You'll become uncompetitive. You got a problem. You got a real problem. Nominal growth, but real decline. So in the economy, what we want to do is we take price in some base year and we multiply it by quantity, and it would be growth in quantity that is real growth. And if you forecast for a business, and you are uncertain as to what your price increases are going to be, but you think that you'll have growing market share and growing sales, maybe if you just forecast out your quantities over time at a constant base price, you would then discount all of these cash flows, because these would be real cash flows. You would discount them at a real rate. So whatever your weighted average cost of capital is, you'd take off whatever the inflation expectation is in there and discount those cash flows by a real rate. I am simplifying this just so that you can see it in your head, because we're taking out the effect of inflation by keeping prices constant in some base year. Futures are standardized. You don't have to look at tons of chain to make a strategy. Tons of chain. I'm not sure what chain is. Why don't you trade futures or mini on index, commodity or T-bond? And if you do, then why not as often as options? That's not an easy question to answer. It's like, describe to me a context and what I'm trying to get done, and I'll tell you which one I'm more likely to use. That's it. Futures are big and bulky, and you have to roll them over time. If you're buying and the futures are in contango, you're paying the carrying costs each and every time. Options do have a better premium. Or at least you can get a better price with options, because it's not just, especially, if you're using futures on options, perhaps you can do a little bit better. I can't possibly describe all of the situations right now. Give me a situation and I can tell you what I'm more likely to use. There is no if-then tree. If this, then that. If this, then that. None of that exists. It's, you tell me what's going on, and you tell me what you're trying to get done, and I'll give you the alternatives that make sense given what you're trying to get done. That's all. Can you please walk through how you get the trade deficit identity from the GDP formula? Okay, it's been a while since I've done this, so forgive me if I get caught up somewhere. Let's start with y equals c plus I plus g plus x minus m, and we have this in the form that we need. Whenever you start off with an equality, if you do the same things to both sides, you get an equality. So let's take taxes off of both sides. Equals c plus I plus, actually, we'll say minus t plus g. We'll just stick it in there, plus x minus m. You should see that that is the same equation, because all I've done was I've just deducted the same quantity off of both sides. Well, y minus taxes is what is referred to as disposable income. And disposable income is your consumption plus your savings, right? Just to repeat that again, y is national income because GDP equals GDI. So y is GDP, it's also GDI. If you take taxes off of gross income, you have disposable income, right? That is the money you get to spend because the government gets to spend the other part of your income. Disposable income can either be spent or saved, consumption or savings. So let's just substitute that in now. C plus S equals C plus I minus T plus G plus X minus M. Let's isolate this to one side by moving all of this to the other side. C plus S minus C minus I plus T minus G equals X minus M. Right? If this is C, if we subtract C from both sides, it cancels out here, and we have it here. If this is plus I, if we subtract I from this side, it cancels out there, and you have a negative on that side. This is high school algebra, right? C minus C. Let's just get rid of those things, and let's collect terms. S minus I plus, what do we have here? T minus G equals X minus M. There we go. Done. Maybe an unrelated question. I'm surprised. Why would you have a money manager? That is diversification of strategy. If you're a pension fund or a large fund sponsor, that means you decide who does what. And let's say that you're responsible for the 10% hedge fund allocation. You would not find one manager, because you would have a concentration of all of your money in one strategy. You'd find 1 all the way to N managers. Maybe it's 6 to 8 different managers, and you'd put money with 6 to 8 different strategies so that you have diversification of strategy. Me managing all of my funds would be concentration of strategy. So that's why I do that. For homes, I wonder if some of the data is recounting homes that were destroyed from hurricane. Oh, I don't know. Probably not. Tia, example, you said you take a loss equal to the premium if the call expires worthless. I'm sure I'm missing something. Okay, so what I did is I sell a call. I sold, I think it was an $87 call. Call it an $88 call. I got 65 cents for selling the call. It expired worthless, which means I get to keep that, and I did 50 of those. So I get 32, what was that, 32.50 in gain on that, because I sold some premium. I sold calls. They weren't called away from me. Whenever you sell premium, you get to keep that. No matter what, you get to keep that. That's yours. So I got to keep 32.50. So that is a gain. So I can take 32.50 in losses and reduce my TLT position, and I've made nothing. I've lost nothing and I've made nothing. So it's a way to use the premiums. Whenever you have a profit, you could say, hey, look, I've made money. Let me just keep my position now. I'm of the thinking that if you make money, use this short-term money you got to reduce the risk. Otherwise, if you didn't want to reduce risk, you wouldn't have sold the call to begin with. You sold the call, you made money, but it didn't reduce your risk exposure because you still have the same number of shares. So why not just go ahead and take that much in losses and then sell another call, which I was able to do for 72 cents. I sold another 50 of these. So if TLT stays below $88 by Monday expiration, that's $3,600. I can go, I'll make $3,600. I can go and take another $3,600 in losses, and I've not lost a penny. That is the whole point of risk reduction, is you sell calls to reduce your delta exposure in a particular underlying. If it expires worthless and you've made that money, if you're going to be true to risk reduction, you would then take that much in losses off your position, so that eventually over time you reduce your position in size without ever having to take a loss by just using the premiums on the options, right? It's all part of working your way out of a loss. This, by the way, this strategy and these and strategies of working your way out of a loss by using the options is covered in the applied asset management side of the applied level. You can find it in there. Totally agree on rate cuts. We should probably be cutting very, very slow, once every few meetings, but we have a reactionary Fed. I don't know that I would say that the Fed is reactionary. We have a data-driven Fed, not a reactionary Fed. I don't, unless you have a different definition of the word reactionary in your mind. But I personally think the Fed has permission to cut in May. I think they have permission. Unfortunately, Donald Trump had to go and open his big orange mouth. So now if the Fed cuts in May, it's going to look as if they're being political, as if they're bending to political pressure. So Trump has basically brought the probability of zero rate cut to 100%. There's no way they can cut in May because of what he did. Now, what I thought was permission to cut, they can't cut. So sort of work the other way, right? Can someone tell me where could I get the 4-quarter operating earnings data for SPY? Look in the description box below the video, and you'll see 2 links. One to a spreadsheet, that's S&P Global, and one to, it just says This Week in Earnings. Click on that one, and I believe it's on page 8 or page 10 of that PDF that you'll get the operating earnings. Most of my portfolio is in USD. I sold the available cash for Euro, but I'm not sure what to do about my investments. I will leave that there. Oops, let's expand that a bit more. Given the fact that the biggest drivers of the budget deficit are Medicaid and Medicare, can you explain what is the issues there and what are the possible solutions? I don't know enough about the U.S. healthcare system to be able to tell you what those are. The free healthcare model tends to work for some countries, not for other countries. In Canada, it doesn't really work that well. The U.S. has a payer system, and then the government does pay for some. But it's so focused around the for-profit motive, heavily for the for-profit motive, that I think that's a big deal. But I don't know enough about this to really have a nuanced opinion about it. As Europeans, I have no idea how the American social system works compared to countries like Germany, which has low deficit, at the same time has bloated bureaucracy and a lot of social benefits. Why is America running a big budget deficit? Is a higher tax rate and various other taxes in Germany the only reason for the lower deficit? It's a big reason, yeah. I find it puzzling that USA has such high levels of debt, and at the same time, they basically have no social state. European countries, France, Italy, Spain, that have the same debt levels have very strong social state and huge bureaucracies. What's your opinion? Some good examples that the U.S. should replicate. Look at taxes. That is a big deal. Is a much lower level of taxes than you would get in European countries. Much lower level of taxes you get in Canada. So, you can look at Canada and say, well, you guys got a high tax rate and you have a shrinking economy. Over the 10 years the Liberals have been in there, the GDP per capita has drifted downwards, while crime has drifted upwards, while healthcare outcomes have drifted downwards, life expectancy has drifted downwards. And we have a big social state. So it doesn't always follow through in the same way. There's a mix of culture in there as well. That if everyone in the economy is on board with what's going on, it tends to work a lot better. If you agree with what your government is doing for you, you don't mind paying those taxes. If you disagree what your government is doing for you and they're charging you a high level of taxes, well, capital leaves, money leaves, which makes things even worse. The U.S. does have much lower taxes overall. Now, I'm not saying every single state, but overall, than some of the European countries with larger social states. But there is a big entrepreneurial spirit, an innovative and technological spirit in the U.S., where just the discussion of a social state is not a tapered discussion. It's the other side of the coin is, oh, you're talking about socialism then, right? And it's just the culture that is diametrically opposed to that for the most part. So it's it's sort of, if I had to give a very short answer to it, you have to look at not just the level of taxation versus the size of the state and say, well, that's the relationship, because Canada has a very large social system, very large tax system, but with negative outcomes, right? Most Americans like to point to the Canadian healthcare system and say, see what free healthcare gets you? And it doesn't get you much, not in Canada. Well, I shouldn't say that. If you can get the healthcare, it's good healthcare. If you can get it, if you can get that free healthcare, it's good healthcare. And we all pay for it because we all have higher taxes. We all pay for it. So it's not really free. It's the illusion of free. And if you want to know how expensive something can be, you know the expression, right? Make it free. I would say the culture in the U.S. Disallows the type of social state you would have in Europe. And the culture in Europe, unfortunately, is almost antithetical to entrepreneurship and growth. So, I don't know. I'm not an expert in this kind of stuff at all. But taxes, I would say, if you're going to talk about the big variables got to be taxes. Any plans for these to be available on Spotify? Not really, because videos are very visual, and what I do is visual. Spotify is auditory, so no. You mention home builders every now and then and how you aren't rushing to get into a position there. No, I'm not. What do you feel is a likely catalyst to induce an attractive future outlay for them? Well, I imagine working inventory off, much lower mortgage rates, probably the other side of a recession. Once you get through all of that, then sure. Treasuries are no longer a safe haven. What's the alternative? I would say treasuries are still a safe haven. They're just not as safe anymore. Link to taxation, already did that. I pretty much agree on everything, so I'm a little more careful to be sure I'm not just confirming my own bias. Looking forward to Tesla earnings, as well as mostly shorting the rips and holding cash, long equity. I think gold has more room to run, but I've closed out my position. You considered a scenario for your TLT position. The Fed is forced to cut rates and Treasury yields drop overall. Well, that is sort of what I've been thinking is going to happen. But the credit quality of U.S. Treasuries worsens, leading to a widening of their... I see you're putting credit spread in quotes, so they don't have a credit spread. I think that's why you're putting it in quotes, their credit spread. I don't know that I would call it a credit spread. We think of treasuries as risk-free, but when we say risk-free, we really mean default risk-free. So what you might be saying is that there might be some basis points added, even if some basis points would be reduced by rates coming down, basis points would be added by the default risk-free segment coming into question, saying, well, maybe it's not so default risk-free as we thought. Now, I don't know if anybody thinks the U.S. is not going to pay them. I think, I'm holding some U.S. bonds, and I think the U.S. is going to pay me in 2041 and 2048 because that's when they mature. Hopefully I'll still be alive when they mature. But I'm not concerned about them defaulting on me. I am concerned about the value of the US dollar just dropping over time. So if I need my money sometime in the next 3-4 years, well, I don't necessarily want to hold US Treasuries because I have to hold them in US dollars. The other part that I am more concerned about than the US defaulting is the greater withholding and the potential of saying, no, foreigners cannot buy US assets anymore, foreigners get out. Or we're simply just going to nationalize all foreign holdings of Treasury securities, or we're just not going to pay these people. Trump decides that, okay, you know what, we're not going to pay China. They've ripped us off for so long, we're just not going to pay them, screw them. That would be a nightmare in that market. So any default would not be an inability to pay. It would be very targeted and be an unwillingness to pay. But I would hope that the U.S. has a government at that point that steps up and says, okay, all right, that's a little too far. That's enough of that nonsense. I would hope that there'd be some other elected official that says, oh, hang on a second, I was elected, and would step up and do something. Haven't seen it yet, but it's always hope, right? I understand credit spread typically refers to the yield difference between treasuries and other bonds, assuming treasuries are risk-free. Default risk-free, yes, but in the hypothetical, let's say treasuries are no longer seen as default risk-free. If the widening credit spread outweighs the effects of the Fed's cut, how do you think that would impact bond prices? Well, I think you know the answer to that. If it outweighs any positive effect, bond prices would drop. Bond prices are a mathematical function of the yield curve. Take the par curve, extract all of the spot rates, discount each of those cash flows at that spot rate. That is the price of that bond. It is the purest form of pricing, because if you give 10 people around the world the same yield curve and a bond, they will get you the same price. I know it sounds a bit far-fetched. I don't know if it's far-fetched, but under Trump administration, almost nothing seems off the table. I don't even know if we can call it an administration anymore, because I don't even see an administration under Trump, period, under Trump. I don't even know if we can refer to this as the administration. The administration would imply a broader team effort. I think this is under Trump, period. So it might be time to drop the word administration from this administration. Please keep the applied level bundled with the main content where possible. My work was willing to pay for it bundled, but not solo. It is bundled still. You can get level 1 plus, level 1 CFA plus, level 2 plus, and level 3 plus. If you buy level 1 plus, you get applied analysis, because that's what lines up with level 1 and level 2. Level 3, you get applied asset management, right? Now, if you bought level 1 plus, you get applied analysis. If you then go on to level 2 and you get level 2 plus, it just slides this one in here. If you come to us and just start at level 2, you took level 1 somewhere else, you get the applied analysis. But you can always, in your cart, let's see if I can draw a cart. Yeah, that's what the cart looks like. In your cart, you can add CFA L1 plus, and then you could just add the applied asset management. I think what you might be saying is that's the problem. That's unbundled. This is bundled, but this is unbundled. Try to keep it all bundled. In other words, have a CFA++ that included both applied analysis and applied asset management. If that is what you're saying, please leave a comment so I know that that's what you're saying. I'm sure we can probably get something like that. How do you check accuracy for AI? You have to check it. I have extremely low faith in AI solutions. So did I. I did myself as well, until I started down the road of prompt engineering. And as soon as you position it in your mind as to what it's supposed to do, it will not do your work for you. That is, it's not as if you can ask it a question and you're going to get outcome and you're going to be done. It doesn't do your work for you. It is an assistant. It's meant to save you time, not to replace you. So it helps you to do the work that you do, but it does not do the work for you, right? So once you get it in your head, it's here to save me time, but it's not going to do my work for me. So let me give you a good example. I started by prompting the AI to write me a 1,000-word outline for a chapter called Understanding Coal Mining, and it gave me some output. And I went through it and I thought, okay, this saves me time because now I have some categories that I can look at. That probably saved me a good couple of hours of just surveying the field to figure out what categories I needed. Then I took one of the categories and I said, it was about the different types of coal. and then I asked it to write me a 500-word article comparing and contrasting the 4 types of coal, and it gave me some output. I then reprompted it with the same prompt saying, the audience are financial analysts, and you get a different output. And for test, I said the audience are geologists, and holy Jesus, you got a completely different output that went way into the geology of it. So depending on how you prompt it, you'll get different things out. Now, when it gives me the 4 types of coal, that is something I can easily check online. I can easily do a few searches, Google searches, to see if that's exactly true or not. But I didn't have to find out the 4 different types of coal. It told me. It told me the carbon content in them. So right away, my analyst mind starts going, there must be a different cost to getting these. And then, of course, you start thinking, are they at different layers or are they different geographies? Right? Does this area have particularly all anthracite, but this area has none? Are coal mines open pit? Are they underground? Then you can start hitting it with those types of questions, right? So it's there to save you time. It's not going to do the work for you. There's no prompt I could have given it that would have given me a 30-page chapter on understanding coal mining that was exactly what I wanted. It's a lot of iteration. So if you're not getting the output you want, it's probably because your input is not precise enough. And there are different parts of your input. You can tell it, what you want it to be. You are a university professor. You are an industry expert. You are a student. Or your audience is this. Your audience is that. You write out your task, then you give it some context. You can give it some references. You can give it some constraints. Most of the time spent is on your prompt. Hitting enter is easy to do. The better the prompt, the better the output. And you do have to understand each LLM and how that LLM is designed, because how it's designed, you'll understand how it's going to take your prompt and strip it down. So oftentimes you don't even have to write whole sentences, because it's going to take certain words and throw them out. So you can type in a bunch of keywords instead, action words followed by different keywords, and get the same result. I was the same way in the beginning. I used it a few times ago. This stuff sucks. I have asked it questions I clearly know the answer to, and it would give me a wrong answer. And it's because for some of them, I allowed it to be too creative. There is something called temperature in these models. You can turn the temperature down and it will become less creative to the point where it takes the highest probable outcome. So much to learn. But it is a tool like any other tool, and you do have to take time to learn the tool. The module I'm developing for this is how to use AI as a financial analyst. All the way from analyzing the industry to the competition down to the company. The goal is to develop certain prompts, and the prompts are building blocks. There's 4 or 5 different building blocks in a prompt, and this building block may have 3 or 4 different variations. This one, 3 or 4 different variations. Is to build a library of these prompts so that you can then use them interchangeably later on, right? You can use different personas. If you want to understand something and you can't understand it, you ask the AI to explain it to you like you're a student. Explain it to you like you're a professor. Explain it to you like you're an industry expert with 10 years experience. Explain it to you like you're an industry expert with 1 year of experience. And you ask it a whole bunch of different ways. Over time, with all those different ways, it's going to repeat a lot of stuff. The stuff it repeats has a high probability of being right. Isn't this fun? Isn't it fun? It's going to be fun. But I get the rest of your comment here. When can you say someone's analysis on something is completely wrong? Like if the person doesn't get desired outcome of what he said or was hoping to get? I can't answer that. We would first have to have a discussion of what does it mean to be wrong. Let's say that I think something is going to happen, and it doesn't happen tomorrow. Was I wrong? It happens in 3 weeks instead of tomorrow. Was I wrong or was I right? Or was I just not right yet? So in saying completely wrong, you have to parameterize that by saying, over what time frame, what variables do you think are going to cause the outcome, and what outcome is going to happen? Sometimes you can get the outcome for the wrong reasons, which means the output is right. You said something would go up in price and it went up in price, but for completely different reasons. You were way off base. Well, were you lucky? Were you wrong and lucky, or were you right? Most people would say, I was right, it went up. But if you look at the drivers, you were wrong but lucky, right? So to say, when do you determine that you're wrong, we would first have to have a very big discussion about what it is that you're doing and what is the definition of being correct. For analysis of something, there can be many possibilities. So how do you recognize how many possibilities can happen? You don't. And you can't. You're never going to get all the possibilities. Then from those possibilities, how do you decide which possibilities to choose and find a solution? Okay, so there's a healthy dose of experience involved in this. And I know when you just start out and you have a whole bunch of theories and textbooks in your head, you think, well, how do you do this? How do you do that? That's the whole idea behind the applied level, is it starts to teach you how to refine your thinking, how to apply some of these things that you know. But there is no answer. In complex social systems, the economy being one, there is no answer. No answer. And there are infinite possibilities, all with different probabilities that you'll never know. They're only subjective probabilities that only experience over time will help you with. After all your work and analysis, is it like, I have done the work and I think this thing will go this way as per my analysis and I'm hopeful it goes that way? Basically, that's what you get to. Yep. I know you don't often follow up on specific stocks, but with your position on Tesla, I wondered if you might. Numbers are out, and the bewildering response to universally negative performance and negative outlook. I'm curious as to what your take is. Yeah, it just goes up. Good news, it goes up because it's a car company. Bad news, it goes up because it's not a car company, right? If there's even one bit of good news in that report, see, and up it goes. And Musk is very good at talking about the future in a non-hyperbolic way. He has a very calm voice, and he says, I can really see that, based on our progress now, that, I'd be very surprised that we don't have full self-driving by third quarter, fourth quarter of this year, based on the results we've been seeing. And he says it in this calm way that you think, okay, this is a serious person making a serious statement, that, this is true. Like, it just sounds so believable. And he's got that persona that just, you feel this level of comfort, that the stress leaves when he speaks, and you say, okay, now he's saying it, I hear it, yeah, and he keeps you invested, and you forget that, but he's been saying this every year since 2014. You forget that, Optimus, hang on a second, the last time he showed these robots dancing, we learned they were controlled off screen by humans, that they're not actually doing any of the work. That he says these are the most advanced humanoid robots in the world, but nobody told him about a company called Boston Dynamics. He wants to sell them for $30,000, but the reality of somebody paying $30,000 for a robot in the house is, you're not talking 5 million units being sold. You forget, it all drifts away because of the soothing way he describes it. He's very good at doing that. Very good at doing that you want to trust him because he sounds so sincere in what he's saying that you want to trust him. And I believe that he believes what he's saying. But there are some things that are just, I think, technologically difficult to overcome. And I'm not negative on him. I'm not negative on his product. I'm negative on the valuation of it. That this one company, this shrinking car company, is worth more than all the other car companies combined, to me seems ridiculous. The Chinese models, I think, have far surpassed him in aesthetics and in technology. Feel very strongly will drop again. Media wants to say this is all due to Musk's Doge departure, but this was already known as a fact since his participation in London 130 days. Yeah, but he didn't do himself any favors by cutting as gleefully as he did, right? Or saying that he was cutting as gleefully as he did, and in the way that it was done. A lot of the work of government is like making sausages. You really want to hide a lot of it from the public, right? If you walked past the sausage factory and there was a big picture window in which you could look in and see how it was made from the ingredients going into the output, you'd never go in and buy a sausage or a hot dog. Oh, a hot dog. You'd never, ever freaking buy a hot dog if you saw what went in there. The little assholes of the chicken, the anus around the chicken, that goes in a hot dog. You see them cutting that out? Yeah, I'm not. So government is kind of like that. A lot of that stuff you just don't want to see. Well, that's what he did. He pulled back the curtain and he let you see all that stuff, and it wasn't pleasant, right? Also, much of the turmoil, brand damage controversy really only covered part of Q1. We're extremely likely to see strong negative impact in Q2 as well. Yeah, I agree. I've been negative on the valuation for some time, but again, it's got such a cult following. But at some point, I think to myself, at some point, the cult must get tired of losing money every time they buy at $300, $400 only to watch it lose half its value. But then I guess a different cult group comes in to buy it at $240 and rides it back up again. I don't know. How will rate cuts help the average American? Any floating rate debt you have will lower the cost of your debt. If you can reduce interest rates, you reduce the cost of capital. If you reduce the cost of capital, it spurs investment. If it spurs investment, it creates employment. With tariffs, we still won't be able to make up the shortfall we will seeing in GDP. Well, you know what? I don't know so much that as American citizens, you can complain. Every penny a government spends, let's put G in there. Every single penny a government spends must come from you or your children or your estate. It's got to come from you somewhere. Whether it comes from higher taxes or lower level of services, it's got to come from you somewhere. So a tariff is really just a tax on you. The other country doesn't pay for it, you pay for it. Now, if they're done in a certain way such that the US dollar increases, it then lowers the foreign price of the asset, that once you add the 10% on, it hopefully would be the same price on the retail shelves as it was before the tariff, thereby you not seeing any impact at all, and the government by default raising revenue from its own citizens, because if the US dollar strengthened without the tariff, you would notice a decrease in the price. However, there's a lot of debt that's got to come from you somewhere. You don't want the Trump tax cuts to expire. You want those low tax rates. Well, then you got to pay tax somewhere else. I mean, there's no other way to do it. Either you have to increase the tax base by getting more people working, but at 4% unemployment, how much more can you get? Making companies far more profitable than what they are. And the belief is, well, if they had trade surpluses rather than trade deficits, there'd be more taxable income. We can then grow our way out of this through earnings, through incomes. We can grow our way through incomes. In the end, there has to be a tax, and you will pay the tax. And this is the tax that you pay. And you hope that the tax doesn't hurt too much, but anytime you take taxes out, you reduce disposable income, If consumption doesn't decrease, debt increases. If debt increases, the trade deficit will not get fixed because consumers still want to spend more than they make. Which means you got to get the stuff from somewhere. The trade deficit won't get fixed. Let's see. Same thing in Paris. Carry the bag and run. Oh, for the picture I showed about those guys selling their wares on the street with these ropes tied to the four corners of their blanket. Why would the U.S. import gold? U.S. doesn't import gold. U.S. doesn't import anything. No country really imports anything. It is the consumers and the businesses in those countries that do all the importing. The country itself, at the level of the government, they're not the ones importing iPhones and importing gold and doing this stuff. The belief from some investors in the U.S. is that the 25% or 10% tariffs across the board are going to apply to gold and gold was being stored in London, in vaults in London. Well, I'd rather have my gold in the U.S. I better get my gold into the U.S. before the tariffs take place, because instead of $3,000, I'll now have to pay a $300 tariff to get my gold into the country. So there was a rush to import as much gold as possible and get it into U.S. vaults to avoid that tariff that would come later. Touch more on the broader topic of corporate governance in different countries. Not really. I liked American stocks because corporate America, in my eyes, acts very well for shareholder interests, and they're a good legal framework and avenue for minority shareholders to protect their interest. Same with Canada, same with UK, same with France, same with Spain, same with Germany, same with Brussels, same with Switzerland, same with Japan, same with New Zealand, same with Australia, same with South Korea. I can keep going. This is not unique to the US. That's not always the case, even in other developed economies. Name one. Name one other developed economy where that's not the case. And of course, in many other developing and emerging markets, yeah, you have a point. But all of the countries I listed off, I would have no problem with governance systems and the rule of law in those countries. Why Canadian go up? Petrocurrency, lower interest rates, headed for recession, depression, high debt, tariff. Well, not really high debt. U.S. has much higher debt to GDP than Canada. Currency can go up in value because the other currency goes down. When they say the U.S. is going up, it's the U.S. versus the Canadian. In other words, the U.S. is weakening, which means the Canadian would go up in value. You can't say the Canadian is gaining strength and it means against all currencies. If you're talking about the Canadian, you have to say, well, the Canadian is getting stronger. The next question is, against what currency? Well, the U.S. Well, then you'd have to have a separate statement about the Canadian versus the euro. It weakened. The Canadian versus the yen, it weakened. The Canadian versus the peso, it weakened. The Canadian versus the pound, the Canadian versus the Kiwi, the Canadian versus the Aussie. Every country has, 50, 60, 70 exchange rates, right? So you can't just say one currency is the Canadian got stronger. Get stronger against what, though, right? Please keep vids on YouTube. Already addressed that. These dark times or periods before recession, should we all pull our money out of money and keep it in cash? I can't answer that. Should we trade with whatever money we have in set? Can't answer that. Last time you said I don't see increased revenue, but shifted revenue in response to my question. Brussels says to stock up supplies because there could be a conflict, so shares of companies like Costco will increase as they will be seeing an increase in revenue. Yeah, but that really just shifts the revenue forward. It doesn't increase revenue, it just shifts revenue. Oh, and then all caps, you're yelling at me now. My question is, whatever I said above, will this even be considered as an analysis at all? I don't know why you're yelling at me. I answered your question. I can only take it that you didn't like the answer to my question, or the answer to your question. No. Any analyst would look at that and say, well, you're not really increasing revenues, you're just pulling revenues forward. So let's say that I buy 10 bags of rice because I think that there is going to be a shutdown in the economy and I'm not going to be able to get to the grocery store. So I buy 10 bags of rice. Well, there is no shutdown in the economy. Do you think I'm going to Costco next week and buying another bag of rice? I got 10 bags of rice. I got 6 months supply. So Costco for the next 6 months is not going to see any rice from me. So if we look at it in terms of sales, they got a whole bunch of rice out of me. But then for the next 6 months, really, there'll be no rice. As opposed to, I buy a bag of rice, a bag of rice, bag of rice, bag of rice, bag of rice. Well, all this is gone and it's all here now. So it just shifts the revenue to this month, but it hollows it out back there. So yell at me all you want. The answer is the answer. No, it wouldn't be considered other than by somebody who doesn't quite understand household inventory and the effect it's going to have on future demand. What if U.S. would grow in price compared to foreign currency? Well, sure, but it's not. Foreign investors will have more. Sure, but they don't. Usually U.S. does lose value slower than other currencies. Okay, but not now, right? If you believe the U.S. is going to gain strength, then sure. I don't think so. A lot of other investors also don't think so. I got out of TLT. I got spooked when yields, the dollar, and equities were all tanking at the same time. I was in it to balance out some of the volatility that were in some of my other positions with the so-called safest assets. Are trading like a meme stock. I'm out. I agree. Took a 2% loss. That's not bad. Sleeping a lot better for it. What an incredible level of self-destruction. Yeah, that is self-destruction. That is self-induced destruction from the U.S. leader. Directly. Exactly. There's no one else to blame for that. I shouldn't say there's no one else to blame. I got to blame Congress for not standing up and saying, whoa, 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 whoa. You can't just call everything an emergency. We've had a trade deficit for how many years? 50 years. It's not an emergency. You cannot use those powers. You are overstepping massively, but apparently there's a lot of fear out there. Nobody wants that guy in their life. Nobody wants that guy in their life. Would a rate cut be positive for equities in the current context? I think at this point, because of what Trump did, because he inserted himself into that process, I think a rate cut would be negative for everything. In other words, we are going to hope the Fed does not cut rates in May to demonstrate their independence. That, I think, would be more supportive of equities, at least right away. I mean, it lowers discount rates for future cash flows. Given the reasons, it must be negative. Yeah, I agree. Certainly looks like inflation is going to come back with new data and container shipping. I don't think so. CNN is quoting him. Nope, they weren't quoting him. Struggling to understand the idea that you take on foreign currency risk when you buy stock that is denominated in another currency. Well, what else would you be taking on? Of course you would be. Say you're a Canadian investor that buys a commodity ETF. Surely you wouldn't be taking on foreign currency risk by converting your CAD to US and using it to what? You're saying if I convert my CAD to US, surely I'm not taking on any currency risk as a Canadian investor. I absolutely am. I just bought US dollars. They can either go up in value or go down. If US dollar goes down in value, I don't get as many Canadian dollars when I convert that back. I'm not sure how you're not seeing that. Ultimately, what you own is a piece of gold somewhere, not CAD or US. No, you own a piece of gold denominated in US dollars. You got to get it's denominated in US dollars. If you want to buy gold without any currency risk, buy gold in Canadian dollars. There, done. Now, why wouldn't that apply to stocks? Well, it doesn't apply to what you just said, so it doesn't apply to stocks. We can pass on all of that. Trump gets rid of, well, hang on. Let's see if you have something different. I can imagine some amount of risk related to the balance sheet. Nope. Has nothing to do with what's on the company's balance sheet. A U.S. company operates mostly in USD. However, a U.S. company usually is net negative USD on their balance sheet. What? With debt usually higher than USDs in you. What? You have a different definition in your head of what currency risk means. I think you think it means something at the level of the company's balance sheet. No, even if you have something as benign as $100 in your pocket, at some point it'll either buy more of your own currency or less of your own currency. If you're holding $100 in your pocket, you have an asset. But it's an asset that you'll either appreciate or depreciate relative to your own currency. Anytime you're holding any asset whose value is denominated in US dollars. You don't have to be holding the US dollars. You could be holding a real asset, but the real asset buys and sells for US dollars. You have US dollar risk. If Trump gets rid of Powell and gains control of the Fed, would that change your mind on TLT? Yeah, I wouldn't try to get out slowly. I'd be out overnight in a second. I need some guidance for level 2. I'll pass on level 2. This is pointing out Trump further posted about Mr. Too Late. Powell has always been too late, except when it comes to election period when he lowered rates to help Sleepy Joe. He didn't do that. Most believe that in July he had permission to cut rates and he didn't. That was the shocker of why are you not cutting rates when you have permission? So in September it was felt, when he cut by 50 basis points, it was felt that he was just catching up with what he had to do. And if he didn't cut rates into the election, it would have been seen as being political. So he had no choice but to cut rates. He had permission in the data to cut rates. I don't think any informed person felt that he was trying to goose the election one way or the other. Why do you use DeepSeek but not Grok? I don't have a subscription to Grok. The subscription I bought from Google had like 4 or 5 different tools all in it. I bought it all in a packaged, all in one package. How much? Oh, we're almost done here. Say the results from Doge is not going to happen. As of today, Doge has saved the U.S. taxpayers $155. Where's your source for that? What he says? What they say? They say 155. Wall Street Journal pushes back and says, in fact, it's an increase of 154. That the actions of the U.S. government from the time they started, with what they've added, with the extra planes, the extra military stuff they bought, the extra expenses they've taken on, and what they've cut, they've actually increased government expenditure by 154 billion. So it's not saving. I mean, it'd be like me saying, look, I made a purchasing decision. I'm now saving $50 a month on my utility bills, but that I bought these 3 big appliances that are now costing me $100 a month more. I haven't really saved anything, right? I did not get what you said about what is the difference between market correction and correction in price. I don't know what you're referring to. Is it the same when people say the market is correcting itself or there's a correction and stuff? I don't know. This would require me to ask you a bunch of questions about what do you think these words mean? So I can't answer these. When you say bond yields will go higher, do you mean they could reach 6, 7, 8% or even more? Sure. I mean, that's what higher means. They could go higher. Wouldn't that wreak havoc not only in the U.S. but around the world? Yep. Given the Fed has a powerful tool in quantitative easing, couldn't they deploy it to bring yields back down? Not if it's orderly. Not if yields are increasing for justifiable reasons. The Fed would not step in and say, well, we got to protect this. Only if the functioning of the financial system were under threat would the Fed step in under a situation like that. There we go.